Hi, everyone. This is Robert Kientz with goldsilverpros.com. I've been given the wonderful honor of providing the intro to the feature presentation, which you will see here in a few moments. And I wanted to start this presentation by talking a little bit about the services that we provide at Gold Silver Pros. We started the website in 2018 after writing for 10 years on the precious metal space and about general economics as well. We provide a quarterly newsletter called the Golden Quarterly. We also provide daily news on the markets, including interviews with leading experts such as Nick Bearschiff of BMG Group, who did a preview with us on gold, stocks, and real estate for 2020, as well as talking with the CFO of Northern Vertex on how they plan to turn around their operations in the third quarter of 2020. We also provide financial education and insight into the general economy. We've been published on many websites over the last 10 years, of which some are shown here, including many others. The presentation today is called Toward a New Age in Metals Marketing, a perspective on the digital investor. This is near and dear to my heart because I've been in the technology space for over 20 years, and I also love the resource space as well. So this presentation will speak to two of my favorite things. The question we have is, so far in 2020, is where are the mining investors? In the last few years, we haven't seen as much investment coming into the resource space. And this is highlighted by a conversation I had with a mining executive at PDAC earlier this year. He said to me, Rob, we haven't seen nearly as many investors this year as we have in the past. We're seeing more salespeople. And I believe that's because the new investors are not coming to conferences to speak with resource companies. And therefore, we're seeing a higher percentage of salespeople who are capturing, I think, what they believe to be a shrinking portion of overall pie. I'm here to tell you today that the pie is actually increasing, but it's just not going to the resource sector. And we'll talk about why that's the case. We have a wonderful chart here from one of my friends, Kai Hoffman of Warren Inc., who tracks the Canadian resource financing and puts it into an index. We can see that it peaked at about 140 in 2011, back when gold was trading at its peak of about $1,900. And it has fallen so far to quarter one 2019 to a value of about 60. That's about a 70% decline in resource investment over those 7 years. And ladies and gentlemen, I'm here to tell you the last year and a half, it's been worse. From 2019 to 2020, the index fell from 60 all the way down to a score in February of this year of 33.21, which is about 1/5 of its peak in 2011. And a lot of us know that as money comes into gold, gold is like the leading barometer for investment in the resource space. When gold is doing well, dollars come into resources. But even though since 2018, when gold has risen from 1190 to the mid 1700s, we have not seen that investment come back into resources or into the gold sector specifically itself, which is a sea change from what we have noticed in the past. So that means something very big has changed. What has changed? Well, there are some other alternative investments getting major dollars. For example, cannabis. We can see here in two studies, one in Fortune and one in Marijuana Business Daily. The first study showed that from 2014 to 2018, the public dollars went from 59 million to 9.7 billion into cannabis, and private from 89 million to 4.2 billion, or 4.02 billion. And in 2019, Marijuana Business Daily had total public investment of $10.3 billion into cannabis. So as you can see, ladies and gentlemen, the pie is expanding, but it's not necessarily going into resources. Where else is the money going? Well, if we look at the cryptos, for the first 7 or 8 years of Bitcoin's existence, the cryptos had a very small market cap. It was basically negligible. And then in 2017, the investment started to spike and it reached a high of $750 billion in January of 2018. The median for the last 3 years has really been about 250 billion in market cap. So that's a lot of money going into an alternative investment that is not gold, precious metals, or the resource space in general. And the reason why is because young investors tend to view information differently than past generations. The millennial generation is actually larger than the baby boomers. It has 92 million versus 77 million for the baby boomers. And if you add the Gen Zers and the millennials together, they're bigger than both the Gen Xer and the baby boomer generations. These younger generations spend about 95 hours per month on social media apps, according to a study done by Gen Connect U. 41% use Facebook each week, along with YouTube, Instagram, Twitter, etc. And this is how they get their news. They do not focus on traditional media brands, such as sitting down on CBS Evening News with Dan Rather, like I did growing up. But instead, they'll focus on what is trending online, regardless of what media outlet is putting that information out. And these investors are more than likely to look at non-traditional investments. Millennials are only using investment advisors about 43% of the time when compared with their parents at 58% of the time. The study shows that when they do use financial advisors, they trust them more, but they're using them much less. They're getting their information in different places. I wanted to show you this chart from a study done on digital news, how the trends are up across all age groups, regardless of who you're marketing to. Men aged 18 to 24 and 35 to 44 are growing about mid to high 60%. 55 is actually growing 79%, and women 45 to 54 has grown 81%. All age groups are getting their information online, not necessarily at investment conferences. And if you look at the mobile usage, it's actually exploded over 70% from January 14th to March 2015. And I expect this number to be much higher as this study is a couple of years old. There's some digital marketing strategies you can use to appeal to these younger generations. Millennials are more likely to engage if emotionally involved. It's something that has a social aspect to it. For example, 85% donate to nonprofit organizations. This is a self-expression of what they believe in. They invest their dollars with what they believe in and how they want to change the world and the way they want to see the world. Therefore, if you're doing socially conscious things in your local communities as a resource company, you want to lead with and highlight what you're doing in your local mining communities. If you're cleaning up the water system, you want to highlight that. If you're providing education, you want to highlight that. If you're providing jobs in communities that have never had them before, you want to highlight that. You want to lead with that in your presentations online. 1 of 5 millennials have posted videos of themselves online, and I actually believe this to be much higher. This study was done at the end of 2017. That data is about 2.5 years old. And I believe that with the explosion in YouTube and Instagram content, that it's probably closer to 60% of people have posted a video of themselves online. This is how they express themselves and share what they're interested in. So the use of visual aids, such as videos on social media to attract more young viewers to your company message, would help you attract more young investors. Virtual conferences are becoming more the norm this year, sort of by force rather than by choice because of the COVID situation. Less people are traveling, and so I've been involved in several online virtual conferences that have been very successful. However, I believe this will be the new norm in the digital age, even after the fears of COVID subside, because millennials interact socially online via live streaming events. For example, Twitter blowing up during the presidential State of the Union address, or attendance on YouTube channel live streams. Millennials skim and skip to the good parts. Why is that the case? There's more content nowadays than there used to be when you and I were the primary observers of it. For example, the billions upon billions of dollars that Netflix is borrowing to provide new content. These are some of the things that you're having to compete with. So the key here is to keep your message on point, shorter in length, and explain why your company and your investment message is important to these new digital age investors. One thing that the Investopedia study showed about millennial investors is that education is a key that opens the lock. The Investopedia Affluent Millennial Survey reveals the importance of financial education as evidenced by those who learned about investing as a teenager feeling confident enough to invest as an adult when they have spendable capital. The study went on to show that if they received education between the ages of 15 to 18, and specifically before age 21, they were much more likely to invest, up to 3 times more likely to invest during that time frame as an adult when they had spendable income. A lot of people, however, are not getting that financial education, so a lot of money sitting in the bank account. This Investopedia study showed that 48% of funds are simply saved in checking and savings account. They're not invested. And this is a big change that needs to occur for the new millennial digital investor. But they need education. They need to understand why investing is important. So if you can bring that educational message to why your company can help them, that will help you capture some of those dollars sitting on the sideline. So remember earlier in the presentation, we had hundreds of billions of dollars going into alternative investments. That pie has grown, but we also have 48% of spendable cash sitting in millennial bank accounts. Again, that pie could grow for the resource industry. Another thing that you may want to do is explain why resources are important. For example, millennials may have these social causes, but they may not understand all the technology they use is backed up by use of copper, such as use in iPhones, silver used in solar panels for the green movement, lithium used in their Tesla car batteries. Why are the resources important to them? Your role is to connect what you do with what matters to them in their daily lives. Connect your mission of producing valuable resources with their value system, and you're much more likely to get investment. Think back to that 85% of millennials that donate to social causes. If they see your company as being a part of the social movement that they want to be a part of, they're probably 85% more likely to invest with you as well. Thank you everyone for listening to me during this message. I hope I provided valuable content to you leading up to this wonderful presentation you're going to get with a great resource company. If you would like more information on how to reach the new digital millennial age investor, please visit goldsilverpros.com, and you can email me at robert@goldsilverpros.com. Stay tuned for a great presentation.